San Marco is an analyst with Janney Montgomery Scott. He joins us tonight from the NASDAQ. John, I want to focus on Procter & Gamble due to its size and breadth in this industry. Profits were helped by cost cuts and cheaper commodity prices, but isn't there a limit to that?
Yeah, sure, there absolutely is, and all the more reason they really need to accelerate revenue growth off of the 2% rate of growth they're slugging through right now.
Not exactly all that encouraging, that growth rate. And when you break it up, net sales across all 5 of its major product lines actually fell. Net sales did, all down. So how much of this is the environment, the consumer that P&G is trying to grab, and how much of it is Procter & Gamble itself?
Well, to be fair, that number you quote, that includes the effect of currency, which of course they can't control, and of course all of their competitors face as well. Excluding the effect of currency, they were up in 4 out of 5 categories, and that's still not enough. I think to reward shareholders, they need to invest in a way that they can get all 5 businesses growing and accelerate that organic growth rate up to the mid-single digits.
Talk about that investment, because P&G is known for big spending on marketing, advertising, research, and development. So is it forsaking kind of these future investments in order to show better earnings now?
So it's along the lines of those investments they've always made in ample quantities, and additionally, this is a portfolio that was sort of built for a bygone consumer era where consumers had a lot of excess money to trade up to the next best tube of toothpaste or the next best diaper, or the more effective laundry detergent. That environment's gone. Unemployment's hovered around 8% or higher for several years, and far worse conditions elsewhere in the world. So now the investment basket, they have to free up capital in order to invest in their pricing gaps and make sure that price is a consideration.
And this comes at a time with significant public pressure. Hedge fund investor William Ackman has really stepped up his public pressure on P&G to return more value to shareholders, and at least in the short term, it seems to have worked here, John. The stock at a post-recession high. So is it going to be able to work long term?
Yeah, I think it's a product of a couple things. I think number one, we're now in year 4 or year 5 of the consumer shift. We talked about, and Procter's in year 4 or year 5 and investing aggressively to get their value propositions right. And like you alluded to, I suspect there's a greater sense of urgency in Cincinnati that to let some business upside flow to the bottom line and to reward shareholders today as well as over the long term.
John, you've got a buy rating on the stock. Do you own any yourself?
I do not.
John San Marco along with us. He's an analyst with Janney Montgomery Scott.
Thanks for having me on.